Hello everyone, this is going to be a lecture about Model 11, the model in the New York session that takes place after Judas. So this model can either be used for continuation for Judas or for a reversal. We'll go through many examples through the charts, but first let us define the interval as it states in the book. It begins at 10:20 to 11:10 New York Eastern Standard Time. The inner intervals are 10:34, 10:44, and 10:55. The root candle is 10:34. Binary to decimal conversion, this stands for 3. The whole theory is based off 369 as stated in the book, the circle of 9. But if 3 takes place, Model 11, we can sort of begin to create a pattern as we talked about in Judas, right? If Judas occurs and we see a reversal here, Model 11, what's likely to take place next? Model 1001, 139. If we see no Judas and we see just Model 3 take place, then at that point we can expect 397 or in some cases 369. So there's ways to distinguish it, right? So if 3 Model 11 begins a volatile move, Model 110, the next model, Model 6, will be used for continuation in most cases. And then Model 1001, aka 9, will be used for distribution. We'll go through many chart examples to distinguish this. Here we have SPX. We have these two root candles, 1034, 953. Okay, now what's happening here? On a higher time frame, what is occurring? You're hitting all-time highs. This is the most recent day of this lecture recording, but you're hitting all-time highs. Now let's zoom in to see what's going on in Judas. As we talked about in the Judas lecture, observe the low resistance liquidity. 953, opening price, root candle. There it is. Above is premium. Perfect opportunity to short here. Right there. When do you expect price to expand? At 1020. Model 11, 1034 candle. Opening price right here. As we stated, takes place between 1020 to 1110. Opening price right here, 1034. Gives you an opportunity to short, and you want to see continuation at 1044 or 1055. 2, the potential terminus in worst case scenarios, 1110. Best case, it will continue till 1235 or even 1409. Okay, let's go through another example. Here's an example of engineer liquidity being dragged from Judas all the way until Model 11. As we stated, 1034 is the inner interval. It is also the root candle. Once you see it close above, once you see it disrespect this to be here, you're going to want to see continuation past these intervals, 1044, 1055. Manage your trade accordingly. As you proceed further into these intervals, you're going to want to see those bullish PD arrays, those inefficiencies be respected until they are not. At this point, price closed beneath this inefficiency up here. What does that tell you? It wants sell side now. But what happened here? Opening price of 1034 root candle, price gave you an opportunity to long. Price is also beneath the 953. As we noted in the Judas lecture, it is the root candle for the entire session to distinguish between premium and discount. So it was in discount on top with engineered buy side, making this a high probability trade. Observe the higher time frame as well, 15-minute time frame. But what happens here? As you are approaching 11:10, what do you need to be looking out for? That bullish PD arrays remain respected. There is a bullish BISI here being disrespected, but if you are still in the trade, then watch this BISI here. Once it closes below, past this inner interval for model 110, different model here, let's solidify these lines a bit more just to make it a bit more clear as to what the intervals are. There we go. And at that point, we can expect a reversal, so we're not going to see that continuation towards buy side. So what can you do in a situation? You can use standard deviation targets of a 3-minute order block. So we are on the 1-minute chart. Candle count, 1, 2, 3 off this low, 1, 2, 3. That's your 3-minute order block. Do a standard deviation there. And as we can see, magically, price is using that 3-minute order block. So we're not using the entire low to high there. We never even reach -1. You can see that? If you want to be a bit more precise, use those 3-minute order blocks. 3, 6, 9. Price then respects the CE of this right here and closes back below it. That tells you a possible reversal is also on the way. A beautiful area to take profit. Now, if you were to long here based off an inversion, closes above, stop below that low, reaching -2.5. That is a pretty good risk to reward there. Now, once price closes above this order block, you can choose to move your stop to break even or give it some more breathing room. Maybe right here on the CIBI inversion. Here's another example. Price 1034, exactly at 1034, inner interval of model 11, begins to reprice towards buy side. Why is that the case? What's happening here? Look at this on the higher time frame. Observe what is happening here. Let me erase this vertical line for you. It's the same day, 9:30 open. Here is your Judas and model 11 right here taking place. What's happening? What PD array is it hitting? This volume imbalance over here. Okay? What should you be looking out for? As the book states, observe 15-minute candles if you're using these daily session time models. If you are bullish and you want to see this low resistance up here be taken out, observe the bodies of these candles. Price should not close with a body beneath this volume imbalance or this BISI over here if it wants to continue higher. Now, because this is a bearish candle here, observe the 50% of that body. See that right there. Look at this candle here. It closes above 50% of it. This one closed right at it. Wait a bit longer if you want more assurance that this will push to the buy side. Once it closes here, about 50% of this, go back to the 1-minute time frame. Observe what happens here. So this candle closed at 10:30. It begins at 10:15, but it closes at 10:30. Okay? So let's go back to the 1-minute time frame and see just how this key level right here, I'm going to draw it, is being used. Now, at what time did the candle close? 10:30, right? That's when the 15-minute candle closed. What did it do? It closed above that bearish 15-minute candle, which is this level here. Very interesting, right? So this is how you include the power of 3 with these time models. Takes a bit of practice, but I'm trying to make it a bit clear here with this example. those 15-minute candles. The 15-minute candle closed at 10:30. This was the opening price, or the C, of that bearish candle. 50% of that bearish candle. Once price closed above it, observe what happens next. 10:34. Right here. 10:34. Because that is bullish, and we're respecting that bullish PD rate down here. 10:34. Expansion towards buy side. Remember, best case scenario, 11:49, 12:35. Look what happens here. Now, time distortion, chop, volatility injected again. So, because we saw this expansion here, once 11:49 hit, we can then expect time distortion until 12:35. Why? Because Model 3, 9, Model 1001, 7, 3, 9, 7, 3, 9, 7. We're skipping this area here. This is just being used for continuation of Model 11. So we're skipping this. That's why it's 3, 9, 7 in this example. Let's go through a couple more examples here. Different day, but look at this. What does Model 11 do now? Here. Judas creates sell side. Model 11 takes it out. 1034 root candle. It creates sell side. A little bit of a retail bear flag, right? We draw a parallel channel there. Your bear flag. What happens here at 11:10? Two things. We are below the opening price of the 1034 root candle. And again, go back to the 15-minute time frame. So here on the 15-minute time frame, this was the 1034 root candle, right? Observe that wick. Now, what is it doing? It's the same volume balance. It's just a day prior. Observe how price on these candles is not closing below the CE of this PD array. So what do you want to see? Look how on this candle, it's very random, right? This wick here, 1030, this came from 1034. This is the opening price of 1034. Root candle. Opening price. Look at this 15-minute candle. It closes at 11:30, but look at the body. It cannot close above it. What does the next candle do? Wick back below to that PD array, and an expansion begins. So let's go back to the 1 minute chart. Understand the times. 11:15, this candle opened right here and closed over here. 11:30, this candle opened here and closed up here. So let's see what happened on the 1 minute time frame. Here we have that same setup. Let's draw our times here. 10:20 to 11:10. What time did the candle close? 11:30. Up here. But we're still observing this root candle here. This is still technically Model 11. Why? Because this engineered liquidity here, this higher time frame PD array being tapped into, and let me erase this vertical line, this V-shape recovery off this inversion. There's your manipulation. A, M, D. Accumulation, manipulation, distribution. Still technically model 11 because it is at the very latest going to begin at 11:10. This is a perfect example of that. Now remember, 11:30, that 50-minute candle closed. But look at the 1 minute time frame. What is price doing? It's closing above the root. It's ready to push up. What is it doing here? Pushing back down to that same root. But look at this. This shouldn't scare you. If you're in longs here, this should not scare you. This is exactly what you want to see. A wick. If you start to see bodies close beneath that root candle again, it's best to manage your trade and get out. But when you see wicks, market makers are buying this. They are purchasing right here. Taking all these stops out and purchasing here. It is simply just an OTE based off the range as well. Very simple. This low to that high, OTE, optimal trade entry. Look at that. Goes right between the 4.8 and 5.7 for continuation. Let's go through another example. Now here's an example of the 1034 movement beginning at exactly 1034. Why is that the case? There's engineered sell side. It's pretty obvious from Judas. But what's happening up here on the 1 minute time frame? Before we proceed to the 15 minute, what's happening here? Price begins to disrespect this bullish PD array, this small BISI right here, closes below it. That should tell you need to be looking out for something. That you need to be looking out for the low resistance liquidity that's sitting right here. What does this look like on the 15-minute time frame? Let's take a look. Here we have two candles. 10:15 opens at 10:15 and closes at 10:30. This one opens at 10:30 and closes at 10:45. But as we mentioned, this is a turtle soup technique. Think of it like daily bias. If this was a daily chart and price closed below the CE of this bullish candle, what does that tell you for the next day? That you need to be looking for downside, right? The same thing on the 15 minute. It's just managing an entry there. So here, you can wait for a candle close, but knowing time and price, you can also use the wick. That's an even more advanced concept. But looking up here, what's happening up here? Is there any bearish PD array that we need to look at? There's an order block right here. Down close candle. Okay? Right there. Use that for an entry. Use that for a PD array. Looking at these 50-minute candles, as I mentioned, you can wait for this to close beneath. Or another advanced technique, the CE of this candle. You see how price does not want to close above it with the wick? So watch this as well. Take note of that. And then when we go back to the 1 minute, you can see how price just takes out all that sell side and goes back to the next PD array of choice. This SIBI inversion up here. Respects the CE of it. Very random, right? But that's price. Now, when you look at it from a time perspective, we can look at the 1 minute chart. So here, we simply have just price. You can use all of that for an entry, but when do you know, things might occur? That's where time comes into play. And when do you know when to expect the end of a move? Well, Model 11, remember, potentially can finish at 11:10. So by then we'll know, right here. When should it start? 10:20 is the interval that we're paying attention to. $10.34, the inner interval. Look at that, right there. It starts, right? So you put all of these things, all of this knowledge together, and really study it. I know it's a lot, but take your time and really study it, because once you get it down, you're going to get really great trades. Okay. So 1034, price starts to reprice down. Manage your trade. Observe bearish PD arrays. It's 1110. If price starts to disrespect bearish PD arrays, that tells you, okay, it's going to push back up slightly, or you can still hold on runners depending on the contract. Okay. So that was a beautiful example of price beginning to take out Judas liquidity at 1034. Now, what happens when there's time distortion during Model 11? Before we begin the time distortion examples, I just really quickly want to talk about what we talked about in the previous lecture. Judas creates buy side. 1020 begins that move. So what is Model 11 being used for? Continuation of Judas. So in this case, what should we be looking for? 1, 6, 9. Judas, Model 110, Model 1001. So you can see how, because there's an expansion here, we're then to expect continuation into a Model 110. Different day, same idea here. Expansion, continuation into Model 110, then we get that reversal. So combine standard deviations with time in these models, and you'll begin to see just how everything is utilized. Now here you can use, again, the 3-minute order block, or because this is such a tiny leg right here, price leg, you can use the 6-minute order block as well. What do I mean by 6? There are 6 candles here. 1, 2, 3, 4, 5, 6. 6 candle formation. So you can use that for standard deviation as well. But because Model 11 is being used for Judas continuation, we're to expect Model 110 to be the reversal. So here's an example of time distortion occurring during Model 11. What's happening? They're engineering sell side. So what should you expect? Model 110 to take place. You get that distribution down until 1149 or 1235, right? So because we saw this chop, this engineered liquidity, it got dragged all the way until Model 110. Again, observe the 15-minute. Look what happened at open. Fell down into this 15-minute busy. Down here. At that point, it was right around Judas. This is your Judas model. What is Model 11 doing? Engineering sell side. What's happening here? Model 110 right here. Why? You are hitting a 15-minute city. To reprice to what? The internal of the range. So this is the range here. I'll define it for you. Here's that range. Internal liquidity. This is an internal PD array of this range when it comes to price. So price is just repricing to it at New York Open. Going back up to this internal PD array, Model 110. So Model 11 was used for sell side, engineered sell side, aka just time distortion. Doesn't necessarily have to be chop accumulation. It could even just be like this, and that's still time distortion. And then Model 110 takes all that liquidity out. So what's important about this? Well, when Model 11, just like Judas, let's say Judas creates buy side, right? And we all know from the previous lecture that we need to be looking out for that. When Model 11 creates engineered liquidity, just like weekly session models from the book, we need to be smiling and smirking because we know, oh, we have this bearish PD array up here. I am now expecting model 110. All this beautiful liquidity is sitting right here. This is going to be a very easy trade. All I need to do now is wait for high resistance liquidity to form on the 1 minute, and I'll dissect it here for you in a second. So that's our bearish PD array, right? Observe the 15-minute. What's happening here? Model 110. But when it comes to price, what's happening? There's your market structure shift, displacement, price then goes back up, pushes into this breaker. If you're into breakers, then here it is. Gives you an opportunity to short. So this makes it high probability. You're including time into all of this. You know what it's going to go to. And you know what model it is. You know what liquidity it's taking. You know what time it's doing it. Okay? That's what makes it really beautiful. So let's draw a bit of different scenarios, right? So let's say, let's go to a chart over here. So here we have a portrayal of the time intervals throughout the day. So like the book states, this is your y-axis, price. This is your x-axis, time. It's always constant. We talked about Judas in the previous lecture. We talked about different scenarios. Now let's say a couple scenarios here, a couple patterns. Let's say New York Open, price does this. Engineers liquidity, starts to move. Reverses at model 110. Distributes. And end of day move expansion. What is this? This is, type it out here, 1, 6, 9. Judas is 1, 6 is model 110. Excuse me, 1, 6, 7. I was already thinking ahead. And then model 111 is 7. Distribution end of day to take out the liquidity sitting here. 1, 6, 7. How do you know that's going to happen ahead of time? Bullish PD array, bearish PD array, 953 candle. Observe that 953 candle. It's down here. The algorithm can only do so many setups each day. I'm telling you right now. It's going to be repeating. Once you study these time models, you'll know, oh, it's going to do this next, right? And there's going to be some days where you have it to a high degree, the accuracy. But there's a bullish PD array, a bearish PD array up here, and then it reprices back to the 953 root candle. That's one example. Next example. Price keeps building buy side. Model 11 takes it out. Model 6 is used for continuation. Model 9, distribution. Model 7, slight retracement. What is this? 397. Model 3 took place. What can you expect for Model 6 now? Continuation or time distortion. Then Model 1001 is high probability. It can also just distribute on a trend day towards the upside. So pretend this right here is up here, and it just continues with a drop later on for Model 111. Why is that the case? Because depending where the engineered liquidity is here for Model 1001, that's where it will go. Okay? So that's that possibility with Model 11. This one does not include Model 11, but that's one possibility there. Same thing, same type of price action. Model 6, you see a reversal this time. What do you expect from Model 1001? Chop. Then expansion for Model 7. What is that? 3, 6, 7. 3, 6, 7. If Judas occurs, very rarely do you get 3. Very rarely. It's very, very rare. But when it does, it'll just be 139. Only these possibilities right here for Model 11. So what would 139 look like? Expansion, reversal at Model 11, Model 6 time distortion, more generated liquidity at the end of Model 1001, distribution. That is what 139 looks like. Later on, I'm going to make a chart for this graph just to make it a bit more clear. I might even include it in the new version of the book. Okay. So depending who's watching this at this point in time, just let that be known. But this is a lecture on Model 11, possible scenarios, possible integration with other time models, and what to look out for on the 15-minute time frame. I hope this lesson was insightful.